Hi there, this is Michael Kramer of Mock Capital. Today is Tuesday, July 30th, and it's around 7 p.m. New York time. So between now and Friday, the markets are really going to get active because we're going to have a lot of important data coming. Tomorrow morning at 8:15, we're going to kick off with the ADP employment numbers. We're looking for 150,000 jobs to be added. That's going to be flat with last month. Then, of course, we're going to get the FOMC rate decision later at 2 o'clock. Expectations are for no change. But again, typically around 2:30 when Jay Powell starts his press conference, markets will be listening to and looking for any sort of hints that he may be looking to cut rates as early as September, because odds have already gone to pricing in at least one rate cut by then. Then on Thursday, we're going to be getting non-farm productivity and unit labor costs, initial jobless claims, which have obviously become a huge number market's been paying attention to. ISM manufacturing then comes at 10 o'clock. We're looking for 48.8 versus 48.5. And then, of course, the big report will come Friday morning with the job report. We're looking for 175,000 jobs to have been created in July, down from 206. Unemployment rates expected to stay unchanged at 4.1%. Average hourly earnings in line with last month at 0.3. Year over year expected to drop to 3.7 from 3.9. Also, it's worth pointing out that you're going to be getting a BOJ rate decision announcement on the trading day of July 31st, which comes in the evening of July 30th here in the U.S. So this is obviously all going to come together to create what could be a pretty transitionary period of time for the markets. We've been watching the USD JPY FX cross moving lower more recently, basically selling dollar, buying yen. This comes to a really important point right here around this 151.5 to 152 region. Right now we're trading about 153. Clearly a break of this level of support would be a big blow, because this was obviously the high here back in October of 22. This was also the high here in October and November of 23. This was also an area of consolidation here in April of 24. So a break below this region would certainly be a negative, and I would think, again, possibly sets up a return to this 147 area, and potentially could be a sign that the carry trade overall is beginning to unwind. You're seeing the same thing in the euro Japanese yen cross. This has already broken a big level of a big uptrend that was present. Here you can see that if we go along the previous highs, we're also nearing a very important level of support, which could result in the euro yen moving down to around 160, and maybe even further than that. When we swing over to the euro and the dollar, we just continue to see the two really trading range-bound market, really waiting to find out, I guess, what the Fed's next move is. Is there going to be a cut? Is there not going to be a cut coming in the immediate future? Again, with the euro dollar trade, it seems fairly obvious that your resistance level is somewhere around 109.5, and your support level is somewhere in this 106.5 region. And that's been the case now going back to January. So until one of these levels are really broken, I think that you continue to look for those ranges to persist. When we look at the pound versus the dollar, here's our support level at this 128 area that's been in place now for a long time. Long-term downtrend broken. We've come down and we've gotten very close to this area at 128. Clearly, a more hawkish than expected Fed could result in the pound moving lower. A more dovish Fed could lead to the pound moving up. Of course, you're also going to have a BOE meeting on Thursday, which I left off at the top. There's just too many things, it feels like, going on this week. And that's also going to have a big say in terms of where the pound is going. Clearly, the trend right now is higher for the pound. And unless we break support at 128, I think you have to look for the pound to continue to move higher. That just seems to be the overriding direction at this point in time. When we look at copper prices have certainly come back down. They're still above the $4 level. And this is, again, an important spot here. You can see right here at $4, this was an area of resistance. It became an area of support. And so again, this is where we are right now. A break of this level at 4 probably sets up a retest of these lows down here around 370. Certainly a very different scenario than what we were seeing in the early spring, where copper was just running away. Clearly the momentum is to the downside. We are a little bit oversold at this point on or getting to it, close to it on the RSI, but the Bollinger Band says that we could probably still go lower, maybe under 4, maybe around 390 or so. When we look at gold, we're just seeing more sideways consolidation in gold. We really haven't really seen a meaningful move. We're back below these previous highs in here. So at this point, we can call this a failed breakout attempt. Additionally, it appears that we've broken an uptrend that was forming there for gold. So right now, I think, again, we're looking for gold to potentially move lower, maybe towards this lower band here at 2350 or so. But really, I think you have to look for it to move back into this region here. Call it around 2275 to 2300. When we move over to the DAX, the DAX has just been trending sideways, sort of, with the euro. We haven't really seen much transpiring here. When we look at this a little bit more closely, you can see we had a gap down here. We had another gap here. All we've done to this point is just really apparently just refill gaps. I think overall the trend in the DAX right now is lower, as noted by this blue line, this blue downtrend I just put in. And so again, I think ultimately speaking, we're probably looking for the DAX at this point to maybe move back down, maybe undercut this low right here at this 18,140 area. The DAX doesn't look particularly like it's sold off, oversold at all. In fact, there's still plenty of room down to the Bollinger Band at 18,150. And you can see we're only in the mid 50s right now. So certainly there is a case to see the DAX continue to move down along this trend line. I mean, if we break out and we were able to take out this high around 18,550 or so, it could certainly lead to a retest. But overall, it just feels like market dynamics and equities are starting to change. You're seeing the same weakness really in the SOX 50, basically getting down to a level of support here. Again, if this level were to break, we could see the SOX 50 go back to this 4,475 region. And even the FTSE has moved up, but again, it really hasn't surpassed any of the prior levels. And again, as we've spoken about in the past, we just continue to play ping pong between resistance at 8,290 and support at 8,140. And I mean, clearly at this point, the relationship, whatever relationship there had been with copper, is clearly broken. And the FTSE right now is not trading with that at all. And so it seems like we're waiting for some sort of confirmation of which way this index wants to break. It's interesting though, as I'm looking at this right now, I'm noticing here you had a failed breakout attempt, and here you had another failed breakout attempt. So these two attempts to break out above 8280 really did fail. And that's important, I think, because it's telling you that there's probably a lot of selling pressure up in this region. And again, given the decline in copper, it's not really surprising to see that, given the mining sector that's in the index. And so I wouldn't be surprised to see a revisit to 8140. When we look at the Dow has moved up, although it hasn't really surpassed these highs yet. When we look at the Dow from a technical standpoint of a Bollinger Band, you can see that we came down to the 20-day moving average. That's where we held. We've moved back up. Right now, the 20-day moving average has clearly been the major level of support. So the thing here is that we're starting to see a divergence really taking place across the market. You're starting to see the S&P 500 moving lower. You're starting to see the Dow Jones sort of kind of hang in there. And that's because of the way the market cap weightings work, where the Dow is a price-weighted average, and the S&P is a market cap weighted index. And so while Microsoft is in both the Dow and in this S&P, Microsoft doesn't have the same weighting in both. Microsoft obviously has flip-flopped between the number 1 and number 2 position in the S&P. In the Dow, it's a much different scenario because it's a price-weighted index. So in the Dow, UNH has a bigger weighting than Microsoft because the price is higher. It's just the way that the index works. And so you're really starting to see these divergences. And it's interesting because you can make a case and make a claim that, you could see the Dow really rise back up to this 41,000, 42,000 region, and the S&P 500 go lower. So I would say that as long as you stay above the 20-day moving average and you have a rising 20-day moving average, you look for higher prices. If we break below the 20-day moving average, that changes the scenario. And I think then you have to start thinking about what the broader market is saying. And when we look at the S&P, you can see I have drawn in here this giant 5-waved rising wedge structure. And right now the S&P is basically getting very close to potentially breaking this uptrend. In fact, today, when we look a little bit closer, you can see the S&P bounce right off the lower Bollinger Band. The S&P isn't exactly oversold either, with an RSI of around 43, so it can certainly go much lower than where it is currently. The other thing that I think is interesting is that today the S&P 500 also closed below the 50-day moving average, and it also hit up against a 10-day exponential moving average, and that's where it failed. So right now, I think the 50-day moving average continues to be a very critical level. If we break the 50, if we remain and move lower tomorrow below the 50-day, that's going to mean that we've broken this uptrend. And that can become critical because if the uptrend is broken, it could be telling us something more about the longer-term structure of where the S&P 500 could be heading. And it's really going to depend on how you want to, count this out and think about it, because right now we've gotten to about a 38.2% retracement of this leg higher. A 61.8% retracement gets us to around 5,200. But if we're talking about something much bigger and broader than that, you could be, again, talking about something where we're looking at an S&P that gets closer to 4,850 and potentially as low as 4,300. Again, depending on how this structure is drawn out. So I would watch this level in here very closely, because if this uptrend breaks, it could lead to much lower prices. And it isn't even really like you have a 200-day moving average that's going to support the market, because the 200-day moving average is all the way down around 49.90. So that would take us back to where we were in the middle of April. When we look at the NASDAQ, we're down about 9% from the peak. Again, we've been able to close at least one gap at this point at 18,660. It looks like we may have just closed it. There's still an open gap down here from the early May levels at 17,580. And like the S&P, we're getting very close to a very important trend line. You can see this is from the October low, this is from the April-May low, and this is where we are right now. Additionally, we're well below the 10-day exponential moving average. The 200-day moving average is somewhere down here around 17,500, and we're also below the 50-day moving average. So the technicals overall on the NASDAQ look fairly weak. We're not really even in really oversold territory. I mean, you can see we hit the lower Bollinger Band, but it's not a very severe oversold condition. The RSI is still well above the 30 area. So again, this is an important area in here. And I think if you want to determine where this market's going to be going, I would be paying very close attention to what happens to the Japanese yen. Because again, overall, when you sort of look at the relationship between the two, and in terms of how they've played out over the last several months, the relationship is quite strong. And if the yen continues to decline, it could be a sign that the carry trade is really unwinding more globally. And that could be another negative also for the NASDAQ, and for that matter, the S&P 500. Anyway, I hope you found this video helpful, and we'll see you next week. Bye.